We've still got a few late comers.
Hi everyone, it's Grant and I'm here with Michael and also Ashley from Lightyear Docs, Sir Pepper as well, and also Venom Optimum. And we're going to be having a really good look at Protector, particularly that missing key, which is the registration of PPSR and also second mortgages, and in some instances, first mortgages around the Protector. This has really taken on a life of itself, and I've put in there, much to the chagrin of Ash, because I actually changed the slides at the last second. Generally, this is probably our premium and by far our best strategy on the Lightyear Docs platform. Really, you won't find this anywhere else in Australia, in fact, in the whole world. Lawyers will keep it to themselves, but from the ones I've seen, they're inadequate, and I'm going to show you why throughout. In fact, we're going to be looking at a case just recently, only 3 months ago, in the New South Wales Supreme Court, which was knocked down. It was a Cleary Hall case using a similar sort of a gift loan back style. And it was knocked back because the promissory note that they used, they forgot to fill it in. So hence the gift from the gifter to the trust was ineffective. So I'm going to give you all the updates on all the cases. I won't go into them in detail. We want to keep this to an hour today, but they all will be in your materials you'll get later on today. But I certainly encourage you to look at the leading case of Attire versus Nussbaum, and also a couple of the other cases as well. And bearing in mind the long session we did with Tim last week on the Boston Act case, where assets sitting in a wife's name are no longer protected at all. In fact, the Commission of Taxation is going to be very aggressive at making claims on family homes, investment properties in the name of a spouse in the event that there is unclaimed tax revenue. So just be careful on that, particularly if you have set that structure up for clients, and you might want to start to move pretty quickly to use the Protector. And I put there the $5,000 revenue builder. Look, if you go to some law firms, it's up to around about 10 to 12,000, anywhere from 4,000, but a recommended price is around about $5,000 per property or per strategy. So we really want to go through this today and show exactly what's going on. We've got a whole lot of really good client comms that you can use. Change GPS have also got a lot of comms that you can use, but we've developed our own ones, including a guide to family, a wealth protection booklet, as well as a video. Why go out and explain it to the client when it's better to send them all the material, get them to look at, and more importantly from there, then to follow them up with an appointment or at least discuss over the phone. I'm pretty sure if Mitch is on at the moment, Mitch has been doing very well, has got over $100,000 in fees, and he's only been going for 3 or 4 months around doing lots of Moat and Castle and also the Protector. When it comes down to it, who in your client base should have the Protector? Well, first off, you can use a Protector for UPEs. You can use a Protector for a family home, an investment property. You can use it for a share portfolio, a high value car. In fact, we just did one recently for a couple of Formula One, believe it or not, racing cars. So you can use it for anyone. So you have a look through all your client lists. How many people have got family homes? If you've got family homes, they're right in the line for the Protector. So let's move on and have a look at the next slide. There's our little disclaimer, so I'll leave that for you. Quick, read. There you go, it's all done. So with the family wealth protection, the Protector, really, we've in fact used, I think, a couple of people have come to me not only for looking at asset protection within Australia, but also asset protection outside Australia. Now, this strategy only works obviously within Australia, but if you've got overseas assets, again, it's absolutely important to pull those into the Protector here, because if there's a judgment against you or a claim against you, you want to have everything consolidated into that family protection trust, which is absolutely crucial point in the whole deal. Now, it's going to be hard to do second mortgages and all that overseas, but I'm sure Venom Optimum will come up with something around that one. But more importantly, you cannot guarantee what will happen overseas. But if there's a judgment in Australia against a client, that the conflict of laws, that's not reciprocated over in other jurisdictions. There's very few things that are actually reciprocated. There might be, for example, criminal activities or criminal charges, or alternatively tax debts don't carry over to different jurisdictions. Family law, child support does, but again, anything that we're dealing with from an accounting perspective generally is not carried over. So if you do have overseas assets, pull and suck them in to your family protection trust using the protector. Okay, so if we have a look at it, as I said before, the very nature of the taxation system in Australia, to have a family home in your own name or joint names, essentially is not a bad idea, mainly because you get the principal place to resident exemption, but there is exposure there. I was going to show the 5 levels of exposure. So with a family home, it's a great idea. Putting the spouse's name, again, have a look at the Bosnack case. That could actually feed fuel to the fire. Investment property is the same sort of thing as well as shares, is that we invest and we gear, we use negative gearing, capital allowances and depreciation in order to mitigate our obviously taxable income or reduce our taxable income, as you all know that. But again, that leaves us exposed because those assets are in our own name. And again, I'm going to go through the 5 different levels of exposure there for you. So the solution that first came to us, and I have to thank Tim for this, was the Protector gift loan back. He showed me all the documentation that was required to complete the Protector. And it's funny, when I had a look at the documentation, one, it was pretty weak, but there was already all documents that we had on our system. So we made a decision at a board level to package them all together into one simple interview, which if there's time, I'll show you a little bit later on how to use that exactly, what each component is, etc. And more importantly from that is that with that particular strategy, it really covers the whole gamut. So rather than having to go in and out of building each and every document, which can be painful, even if you had a common CRM across the whole field, it's just extremely difficult. But having it in a line, it will take me, in fact, I could do a Ripper Protector for you if I've got time later on, within about 8 to 10 minutes, particularly if you've got the client data there. So again, you've got all those templates to use, have all been signed off by Abbott-Family. Some of you, particularly if it's a larger case and you're a little bit concerned about the quantum, we're looking at one yesterday that was around about a $10 or $11 million case. Then in those circumstances, you might want to get Abbott-Family to look over. We can either do a review fee or we can take it over for you from the start and then do a mentoring package for you. So Michael, how are you finding it? Because I know you're using a lot. You're at the back end of the system, but you're also using a lot at your new accounting firm, Accountus. How are you finding using the Protector and talking about it? I know you're obviously you're pretty big in event optimum around this.
Yeah, absolutely fantastic, Grant. We actually did a session yesterday, and we had a Light Year Docs member sat in on one of. She's actually sat in over the 2 days with us, and we were talking about the Protector and actually talking about how to deliver the message to clients and how we deliver the message. And when I'd say we've got a close to 100% hit rate in relation to that delivery.
Yeah, me too. You can't.
No, I mean,
yeah, pretty hard not for someone to say no.
No, and I include, like I do, when especially new clients, but existing as well, I present in a similar manner to, I know I've spoken to Tim Munro about it. We, in terms of the way we cover off in relation to, I guess, the client structure, their risks, their goals, and estate planning and everything like that. So we go through and look at options such as the Protector for our clients and everyone. Yeah, the uptake's been great.
Yeah, fine. And you, Ash, because you're obviously doing a lot of the building at the Light Year Docs
I'm doing the building.
And also the event optimum. So you're obviously going through. I know I've just saw a lot of the comments you're making to our latest recruit on making sure it's easily understood, but it's very unusual.
So we're making a lot of improvements to the interview, so that at each step it's very clear what needs to happen. So at the moment it doesn't have enough guidance, so that we're just adding in a little some tips on all pages so that the users know what they're doing on each page.
So just a couple of things on that, three things actually. First one is, when will the protector be finished? Actually, sorry, when will your Docs 2 be launched?
Light Year Docs 2 has already been launched to some firms, and then we are bringing a few over between now and January. Everyone will come over to the new platform. There is an option to move over before that. We just need to reach out to Ben.
Okay. Secondly, when will the protector be up?
It's up. You're about to show it.
Okay. Oh, okay, cool. I can't wait. So it's up on the new system.
Oh.
Terrific. Okay.
Yeah.
Well, that excites me. Look, can you see me? This was a white shirt. Now it's red. I'm so excited. The third one is also obviously a lot of this when you're starting dealing with clients is that confidence, the ability, obviously, Michael and Ash and myself and many others. And I can again just have a chat with Mitch, who was floundering and really concerned about going to clients around it. But again, go through and do that course, the SAPEPA course. And more importantly, for those people who've done the course, we'll be offering founding memberships, 50 founding memberships before the official launch of SAPEPA on the 2nd of December, which is going to be amazing, because once you go through that, you'll then be a certified SAPEPA advisor, which I guarantee will build you up with a lot of confidence. And really, at the end of the day, the protector is quite a simple tool. Importantly, and this is what I find, and I'll get some feedback from you, Michael, as well, is that when I go and start to talk to clients about this, I say, look, what happens if you died yesterday? And then it depends. I'll say, well, my will says this, my will says that, and I've got all this stuff here. And I had one yesterday. It was quite funny because the client was pretty well to do, and they showed me all their family trust. Each child has got a family trust. They showed me their SMSF and all that. And I said, well, what happens to all these in the event you died yesterday? And mind you, most of the corporate trustees were all single directors. And it was like, well, what's going on? And then they said, oh, it's all dealt with in the will. I said, how is that possible? You can never, ever, it's impossible to deal in a will with a family trust. Likewise, it's impossible. Like, you might say in a will that you'd like Joe Blow, or I'd like Michael to be my appointer. Null, void, throw it out, crap on it, it's just rubbish. So you might as well shred it, because you have to go to the trustee to see who's the next appointer. If the trustee says that the appointer is to be placed by the will, again, throw that trustee out, because that is as old as Hades. So it just doesn't make any sense. We need to be vibrant. We need to be in front of the pack, and we need to understand that this stuff doesn't work unless you've got that leading member bloodline importantly in place. And as we go down, I'll talk the Family Protection Trust. We're now starting to build at Abbott-Family, which will come out on the Light Year Docs system early next year, is building that second generation split trust. So all this concept that clients have in their mind that's been fed in them from very highly expensive estate planning lawyers by building testamentary trust, you can do that inside an existing family trust, which means essentially, generally, there should be no CGT and no stamp duty consequences. Why go and rebuild a trust outside when you potentially got one already off and running? But anyway, let's move on. And again, if you've got any questions, chats, the guys are manning the chats, and then you're off and running. So if we look here, exposure, Australia has the highest per capita number of lawyers in the world. In the Bosanac case, there's been 10 different cases. Obviously, Mr. Bosanac has got a lot of quid and doesn't mind paying lawyers a lot. Sounds a bit like of Clive Palmer. But one of the cases that popped up, and that was only September. So that's that's how close we are to the action. We're getting these cases and we're looking at them, changing things if they need to be changed, or getting on top of them straight away. Importantly, in the Bosanac case there, as if those who came to the estate planning week, there was a property, $4.5 million, and that was in the mid 2012, 2013. So obviously quite a sizable property. It was a pooled bank account where the funds were deposited. Then from there, essentially there was a joint bank loan, but the asset was put in the wife's name. Now, here's the first thing. There was no documentation. Again, there was no documentation, which meant it had to go to the court to decide exactly what was going on. And they held it because it was a joint account, because it was a joint, and more importantly, a joint loan, that effectively it was a 50-50 split. So that although the asset was in the spouse's name, 50% of it was held by her as effectively a resulting trust or a bare trust on the basis of the husband. And as a consequence of that, effectively what transpired is the commissioner could access 50% of that to pay off any debts. So again, if you've got anyone in that scenario, you need to get the protector over them quickly, because at the end of the day, if I was Miss Bosnack and she divorced her spouse some years ago and it was awarded the house in the family law settlement, which now has been upturned, I would be going to the accountant and making a claim on that estate. So just be very careful. Courts have basically adopted to a post-COVID world. We're moving really quickly here. All of you have probably faced at some point in time that nasty piece of paper, the summons, or the court action that's landed on your desk or a client's landed on. It could be for family law or it could be ASIC, ATO, Fair Work, building accident, occupational health and safety, the tax office debt, all of these things that can just come in and really start to make a claim. Even in South Australia, I ran up some parking fines and some speeding fines, and they ended up garnishing my bank account. So the invidious nature of technology at the moment is fantastic, but nothing can be hidden anymore unless you've got Bitcoin, and they're even starting to go after that as well. So litigation is important, and I want to talk about that, is that if you get a summons or a debt or whatever, if you've got a protector in place, it will help you, but you'll see with Section 120, there's a 4-year clawback if there's a solvency certificate from the accounting firm. So that's to make that void. Now, it's very unlikely the trustee in bankruptcy is going to make any transaction void if you are solvent at the time. It will help in terms of negotiating actually the percentage that you're going to pay out. I know at Venom Optimum, who are really skilled in this area, have used that and have dropped the percentages paid out. Do you want to talk about that, Michael, a little bit in terms of the protector, and then if that's in place, how you negotiate and what the impact of the negotiation is, because this is a really important tool. You'll just need to, there you go.
Yeah, certainly, Grant. I mean, obviously, Rod and the Morgan Hillman deal with most of the negotiations, but they've been to the table in relation to a number of, even more so recent, in where there were settlements. There was one, a farmer recently, farmland that we put through the protector, and the claim against it was in the vicinity of about, I think it was 650 or 700,000. Rod managed to settle it for 200,000, which the client was quite happy. So,
yeah, that was a great result, wasn't it? And that was the protector only been in for a little period of time as well.
Correct. Yep.
Yeah. So when we have a look at that again, the main thing about litigation is law is good, but running a legal firm myself, as Ash would attest to my frustration sometimes, is they're extremely difficult, and it takes a long time. Law works, but it works very slowly. You don't get quick results. So it means in litigation that if someone slapped you with a litigation or a claim or a debt now, like in the Bosnack case, it's going to take 3 to 4 years easy to get to court. And it's very easy to spread that out if you've got a good lawyer. So what we end up doing is we end up running out that clock. In fact, we had a session a while ago with Change GPS on there, I think they're 2 or 3 days. And we had a chat with an insolvency lawyer, and I put it to him the same thing as if we ran out the clock, what options does he have? And effectively nothing. So again, these are the sort of tools, the practices, the ideas that we can bring to the table that can really deliver for our clients. So litigation, everyone's exposed, including yourself. We just talked about Bosnack. Are you exposed? What assets have you got in your own personal name? What assets have you got in your spouse's name? And that includes, more importantly, if you've got litigation, if you've got shares in trustee companies, in SMSFs, or family trusts, or discretionary trusts, or trading trusts, or trading companies, or bucket companies, you are exposed. Secondly, we talked about bankruptcy. I won't go into that much. We've already covered that particular issue. Incapacity. Again, I had a chat with, again, a client yesterday that Vern Hembrow sent me to. We sat in there, again, trustee companies, and in half the trustee companies for the children, there was only the sole director. Now that is, one is it's absolutely crazy that would be on. How many of your clients actually have sole director trustee companies, sole director self-managed superannuation funds with no successor director solution in them? Obviously, I'm going to not cover that in the Protector, but you must send out that email to all of your clients telling them if they've got successor director, and I don't care whether they have or not, just do a blanket email out to all your companies, and it's probably not a bad idea. You're going to have to go out and talk to them about director identification numbers anyway, but to just know that they're exposed. And the process of making sure you cover the successor director solution, and we recommend that you charge $350 to $400 per solution, while legal firms charge $1,200, is that you need to upgrade the terms of the Constitution. That's in whole, and that's very easy if it's a trustee company for an SMSF or a trustee company for a family trust, because we have our special purpose trustee companies. So you can actually do that through the successor director solution. And then there's forward-looking binding resolution minutes. So at that time, you don't need to put the person who's coming in. I might have, for example, Michael as my successor director. He isn't, that we don't have to notify ASIC that Michael is a successor director, nor does Michael have to have a DIN at that time. It's only if it's ever going to happen in the event of incapacity. So again, want to make sure that that letter goes out, because again, if something happens and that whole trading company, the trust or whatever, is locked out, then you're in really big problems. We dealt with one at Abbott-Family recently where a client had set up, an accountant had set up a family trust for a client who wanted to look after his wife and children. He was the sole appointor and also the sole trustee. It was on the behalf again for his wife and children, and there's quite substantial wealth in there. Went over to South Africa, died. We had a look at the family trust, the discretionary trust. There was no successor appointor. And in terms of replacing the trustee, the only person who could replace the trustee was the appointor, who was dead. So the only way out, the only option for the family to get any money out of that trust was to go to the Supreme Court and get appointed a new trustee, which would take 4 to 6 months and around about $40,000, simply because the documentation wasn't completed correctly in the first place. Incapacity, COVID, quarantine, all of these issues, you need to really have a look at getting that successor director. And again, it's exactly the same thing that happens in the event when we come around to that family protection trust, that if you are incapacitated, then we simply drop down to the next leading member or family protection appointor. As I said, and I'll read this, on death, most people who have a will would expect that all of their personal assets, including home, investments and superannuation, would be paid out in accordance with our will. And we all know that is absolutely wrong. Just have a look at the number of family provisions claims. And they are widening. In New South Wales, they're even now starting to get friends who've been financially supported by the deceased making claims. Whether it comes up or not, we've just got to be really careful. We've even had claims in New South Wales where self-managed superannuation fund monies have been able to be attacked through the notional estate under family provisions claims. And I bet you that not one lawyer you've ever seen, when they come around to give estate planning guidance and these brilliant wills and testamentary trusts that they pad out with these, pages and pages of documentation, that they may well be they may apply but an estate of, say, $2 million might be racking up $800,000 in legal fees over a 5-year period, that all these things that started off fantastically are all eaten away, like the Miller and Taylor case, where a $600,000 estate was whittled down to $80,000 after legal fees. So again, we've put that in there with a family provision claim. So again, anyone who's got a will really needs to be looking at the protector. Family law, obviously the issue around family law, and after we looked at Spry and Kennan and Spry, and particularly if we had to look at a couple of cases, although there's a lot of information coming out on that now, is that if you've got control of the trust or the family protection trust, then in instance, you're really, those assets within that trust may well be classified as matrimonial assets as opposed to a financial resource. Now, when it comes down to second and third generation, particularly when we're building those split family protection trusts, in that instance, it's very easy to protect the second and third generation. First generation is not that easy to do, but again, the whole game, and listen to this again, the whole game is about putting up barriers and making it very, very difficult for the other side to breach that barrier. The very nature that you've got a protector in there, particularly if you've got a second or third wife, and you want to hold the assets quite aside from that, again, they've got to go in and break it down, particularly if the appointors are your children, the trustee is your children, etc. And then you're only a beneficiary, or you can even be an excluded beneficiary if you want. Again, there's a lot of ideas around protection, around the family laws, etc. If you need help on this, please feel free to come to Abbott-Family. We see this stuff day in, day out. That's our business. So that's the 5 key elements there where there's exposure. Now, most of you should be well aware of what the protector is, and I'm going to go through each of the steps, but we'll just go through a glossary. We'll take a big look of it. We'll go through this and we'll go through the steps. And then what I might do is I'll get, actually I'll build it on the site and we can test it out as well. So we've got here assets in our own name, a nice flash car of 150,000. We've got a family home of $1 million. So our net wealth is $1.15 million at that present point in time. And we'll say this, we're just looking at one. You can do joint protectors, but here effectively, and we'll talk about this with Mike a little bit later on, but here we've got this $1.15 million all in the name of John Smith. So the first step is to set up a family protection trust, which is essentially a leading member trust. It's just got a fancier term. You can use either. When you're in the protector, the family protection trust will pop up. So you can actually create that trust within the protector. You're going to have to set up a special purpose family protection company trustee before you go in there. Although at some stage, is there any indication, Ash, of being able to set that up within the protector itself, that family protection trustee company?
The protector is such a long document. We just have to scope that one out a little bit more, but yes, maybe.
Okay, so before you start the protector, we need to set up the trustee company. Importantly for that, the only shareholder should be the leading family member. Actually, there's a bit of a typo there. Should be the leading family member. And as a consequence of that, and that could be joint, so it could be husband and wife if you want to go down that track. My preference is always, you may well have the spouse as a leading family member, but if there's potential family law action, it's better for one person to be family member and then the spouse to be the successor leading family member appointor. Now, what will happen there is the shares are held by that leading family member. Importantly, from that perspective, is if they become incapacitated, if they die, if they're litigated against, or any action is taken against them, immediately they will then resign their leading family member appointorship. And then it drops down to the next successor leading family member. What happens within the Constitution, and you won't see this anywhere else, within that Constitution, the shares that were held by the original leading family member appointor are cancelled. And then new shares are issued. The successor leading family member is appointed as a director of that corporate trustee. now has all the shareholding and is also the chairman with veto power. Although if they want to add additional directors, they can do so. So that trustee company is absolutely crucial to the success of all of the protector. If you haven't got a special purpose trustee company, then you're out of the loop. The second one is then to have that family protection trust, and it is bloodline only. And essentially what happens is this is where it's different. And I remember going back, and when I built the leading member discretionary trust last year, people were saying, well, how's this different to a leading ordinary discretionary trust? And I must admit, I said, well, it's basically built on bloodline. But over time, my thinking has actually been that what I did is actually created a bit of a masterful sweep, because over the last 6 or 7 months, we get a lot of work at Abbott-Family for people to delete appointors, delete beneficiaries as a consequence of family law court orders. So we do that on a number of occasions. And it just shows me that by inserting the principal beneficiaries into the family protection trust is actually a very dangerous thing. We're better off, instead of using principal beneficiaries, using positions. So the leading family member appointor is the designated beneficiary. You'll see with our new family protection trusts and also leading member trusts, it now includes original, current, and also future leading family member appointors or leading member appointors. So that really opens up the gamut, and particularly if you've built that line of succession well. We've got 3 there, but look, I like to go to 4. Our light year docs now goes up to 6 levels of succession. If you get succession right, that is the absolute key. And then it means that all those people who are designated as potential successors or second successor, third, fourth, or fifth are all part of the principal beneficiary trail without having to name them in the document. And importantly, if we then boot, because again, the leading member, the current leading family member appointor, can boot the other ones off the game if they want, or off that reserve bench. So immediately takes them out. And that's the brilliance of the whole situation, is that it's focused on position, not names. And that is really important when we get down to second and third generation split trusts within there, so that when mum and dad, or mum and spouse, or dad and spouse pass away, then that family protection trust now drops down into the children's laps. So each child has its own designated area in that family protection trust, like a subtrust, but not quite a subtrust, where they then have a person who is then elected to the trustee company, and then they also have their own appointor for that trustee company. So it's an amazing new development there for us, and really throws away all that testamentary trust rubbish that we've got there. So then what we do is we set that up, and we've set it up properly. The first step there is then to make our gift. So your client needs to determine, and what I'll show you through the client comms in a sec. In fact, I might get Ash to take you through that booklet. But essentially what we've got there is the client determines what the net wealth is. For those of you who are financial planners, you're going to have a pretty good idea, as accountants are. We want a value on the upside. So value on the upside, and then we make a gift across the family protection trust. That gift is all important. It needs to be a properly structured deed of gift. I've seen some done by way of minute. It doesn't work. You need to have a deed of gift, because once that is signed, once that is executed, there is no way back. You cannot claim it's a sham. Have a look, for those of you who are a bit worried that these sort of things might be a sham, have a look at Attire versus Nosbaum. Exactly in that case, the original person who did the gifting unfortunately did it to his mother, and they ended up having a fight, argued the whole thing was a sham. And the court there, Queensland Supreme Court, held that essentially all the documentation was in line. How could it be a sham if it was actually set in place? So again, that gift is all important. Now, we can't transfer the assets over, and we can. I mean, if clients got shares, where there's no capital gains tax, because what we're effectively doing, we don't want to transfer anything that's going to create a stamp duty or capital gains tax issue for us, because obviously that will create a problem. So what I'm going to do is we're going to use a promissory note, which is the forerunner of the checks, which don't even get involved anymore. But it comes out of the Bills of Exchange Act 1909, which is obviously a very old act. And again, provided it's done appropriately, and if you have a look at the cases, because if I'm trying to break open this case, and you have a look at me, I always look at it from a defence lawyer's perspective. How am I going to attack this? The first way I would attack it is the deed of gift strong enough? Is it actually declaring that there is a full gift over? Secondly, the gift that's going over, is it backed by a consideration? So if I say there's a gift of 1.15 million, if I just simply say it's the equity that I have in there, equity is not a gift. There is no such thing as equity. Equity is something I can just pull out of thin air. I need to transfer cash. I can transfer shares. I can transfer over UPEs, but they actually have to be real things. So what we use, again, if you've got a UPE, transfer that over. If you've got shares that don't have any capital gains tax, again, transfer those over. But the other amounts of wealth can be covered by a promissory note. And again, you've got to make sure, particularly after that, that stuff up, which I'll show you in the case coming up very shortly, you need to make sure that that promissory note is strong, robust, and you've actually got an amount in there, and it accords with the Bills of Exchange Act. We've been very careful to make sure that our documents comply with the Bills of Exchange Act, because that is the way. You'll have a look at a couple of cases. They try and attack the promissory note. So again, the money goes over into the Family Protection Trust, and then we've got obviously accounting entries around that. And for those who were on the system last week or on the estate planning week, you would have seen that with Tim as well. Now, what goes back from there is then we end up lending the money back to the gifters, and effectively, in order to lend it back, and this was the thing that I always got worried about, is that we're lending what back? Because nothing is being lent back. I mean, the whole idea originally, the ones I saw to start off with, is equity go over and equity goes back, but equity's a nothing burger. So what we've done is the promissory note goes over, it's like a check. So John Smith writes a check or a promissory note over to the Family Protection Trust, and then the Family Protection Trust gives that check back or that promissory note back to John Smith. And it does it by way of an endorsement. For those of you old school, you remember you used to be able to get checks, you'd write on the back, I hereby endorse this $10,000 check to Ashley Jarman. And so it effectively...
Right, if you want to, sorry, just to jump in, if you want to move through to the next slides, all the steps are listed out in details.
Perfect. Cool. So we then go, so I'll just finish off with this one. So we then do the loan back. That goes back, and then we need to secure that mortgage there if we go. So we've got a couple of comms here. So the first one is that we did, what I'll do is I'll go through the comms, then there's a few questions on board. So if you've got any questions, I'll just go through the client comms. And then if you want to put it up on Q&A, any questions, I'll go through those. Then we'll go through and reiterate those steps again. So if we have a look there, we've got the client video here. You'll see. This is available for you. Appropriate insurance. We can't always rely on insurers. So this is directed towards clients. So effectively what you're doing is it's really a client-based materials. What we've also got is this guide to protecting family wealth there. And you'll see in that, let me just blow it up a little bit further. So this goes through much the same sort of information that we've just discussed. So it goes through.
Down at the bottom of that, we have a data capture as well, Grant.
So again, have a look there. This is not, it's exactly the same discussion we've gone through, the 5 points: litigation, exposure, incapacity, exposure, bankruptcy, exposure, death exposure, family law exposure. We then go through exactly the same steps, the protector there. And then we cover each of those steps. Why are we doing this? Why are we establishing a family protection trust? Why do we have to calculate family wealth? Why do we do gift net wealth, loan, securing the loan, etc.? And then importantly, the call option, which I'll talk about next. And then we've got the what to do next. Do you just want to cover it from there, Ash?
Yep. So there we just have here. So that's just a data capture there for calculating the net wealth. So you can do that with your clients in those ones. And on the page upwards, there's just some contact details as well. But you can use that and you can take the content and use that with your clients, or you can just, go from there.
So what we've got there is we've got a really tight comms there. Those of you with Change GPS, feel free to utilise, again, their system. But now you've got actually both sets are there, which is, for me, it's fantastic. So where will those materials be, Ash?
We'll be sending them out after the webinar. So they'll be on email, otherwise they'll be in the support site, or if people on Light Year Docs too, they'll be sent out over the app. Okay,
so the 4 cases, let me just take some questions, then we'll get in the cases, then we'll reiterate the steps, and then we'll get, I'll rip in and do a quick protector. Okay, from Angelo, can you please explain the mechanics of how the asset protection trust actually works, and also when banks are involved and hold security over the asset, how that comes into play? So that's a really good, in fact, I might get Michael to answer that question. So we've put in place the asset protection trust, and then what we've got is a banker's got a mortgage over, let's say, the family home. We then go in, and part of the process, this important part, is to then hand it over to a Venom Optimum to secure the remaining equity in that property. So the question there, I'm not sure if you can see it on the screen. Can you see it on screen, Michael, or from Angelo? No.
Yeah, I saw it on the chat before, and I actually put a brief response, but I'll answer it now in person. In effect, the bank will come into play if there's a second mortgage, if it's we're putting a second mortgage in place. In most states, or most bank mortgage documentation, they require a deed of priority and consent. Not all states require a deed of priority or consent, but the actual bank documentation and the mortgage documentation have turned to that, and they'll actually request that you go through that process. So, and that, I mean, they generally will provide consent. I've only had one so far who's caused a bit of problem from a rural bank level, but it just keeps trying to fight it, but to allow us to put it in place. So,
but there's nothing they can really do about it, is there?
No, there's not. We can still register the mortgage, so but supposed to give consent.
Cool. Okay, from Phil, will you be dealing with protecting equity in a business? That's going to be the subject of a second business protector, where we can license goodwill over to the Family Protection Trust and all the goodies are sitting over there, and then leasing them back. So that'll be, watch out for that very shortly, Phil, but great question. From John Stitt, where the individual trustee of a testamentary trust that holds property gets involved in a family law matter, is the real estate property in the testamentary trust from his parents protected from the court's decision to split the couple's assets? If he's the individual trustee and the appointer, yes. If you have a look, there's a number of family law cases where, for example, brothers have been essentially trustees and appointors, and then that asset's been held from a testamentary trust. It's only been used as a financial resource rather than matrimonial property. But if it's set up like you've said, John, I think you're in extreme danger, which is, again, why we need those family protection trusts. Even with a testamentary trust that comes out of an estate, you always need to be using a leading member trust and making sure, if you want protection from a family law perspective, that essentially that the individual concerned is neither an appointor nor a trustee nor can control. Okay, so from David Ruthenberg, I've already organised steps 1 and 2 with a client with $4 million of IPs, and I'm stuck on how to do steps 3 to 5. Of a valuation schedule of assets not already done. Does Michael help out there? Absolutely.
Just important with that, if there's says IP, so it suggests that there's several IPs David, that the mortgage deed that comes through on the protector, that each IP is on a separate mortgage deed, because those mortgage deeds actually become the terms and conditions of the that sit behind the national mortgage form.
Perfect.
So we can assist with that once you send it through.
So the best thing to do, David, get in touch with obviously Michael on that one, and he can more than easily help out. Roy Benson, are your documents likely to not hold up if challenged in court? That's the whole thing. If you have a look at it, and we'll go into the cases very shortly, we continually look at all the cases that come up. We look at originally deeds of gift. We look at promissory notes. We look at the bills of exchange to make sure that they stand up, because again, they're obviously things may well be attacked, but we're trying to put a moat around the castle, which is absolutely crucial. So it's important, again, binding death benefit nominations. Why do they stuff up? Well, that's because they've got a document there that doesn't accord with the trust deed. So, for example, a classic one, if you have a look at Donovan and Donovan, the trust deed required that any binding death benefit nomination had to be in an approved form. It's very easy to overturn, because when they did their binding death benefit nomination, the first question that was asked was, well, hold on, has the trustee released an approved form, which is never the case. So it just fell straight away. Again, we make sure, and we've spent a lot of time on this, and I'm going to talk about the call option a little bit later on, which I think is probably one of the best sides of the equation. Can I update an LM deed with only 3 successor appointors to 4 successor appointors? Absolutely. So if you have a look, I think there's changes to the discretionary trust. I might need to go back and have a look at how we can develop that. But maybe, Jenny, if you want to send something in, do a support question, and then what we can do is we can have a look at that and make sure which document is appropriate. Here's my favourite, Mr. Mitch. Husband and wife team. Husband has licenses, etc., and operates a business. Who should be the first person in charge of the protector? Again, it depends on what the key elements there are. If you've got licenses and you're keeping them inside, the husband has them, then obviously I would, if possible, if it's just the equity going over or the value going over, having the spouse as the trustee and the appointer, that's the main control there. Ideally, it'd be great if you could transfer that license over to the Family Protection Trust and then have it leased back or licensed back to the husband. That would then sort of solidify that. You may be able to use the CGT exemption rules in that regard, if need be, if you're worried about capital gains tax. Unpresented checks, thank you very, John, are stale after 15 months. Promissory notes can actually go for a lifetime. Mitch, if you transfer the actual assets, into the Family Protection Trust, you are going to have to start lodging tax returns. Actually, this is an interesting one, Michael. So we're working on a case with Mitch at the moment. The client's got a couple of mil of shares that we're looking at protecting. Now, what he does is he trades in and out all the time. So he loves his trading. So it's easy to gift over that value. But how do you go about PPSR on that? I've been meaning to talk to you, so sorry to put you on the spot. If you need time to think about it.
Where are the shares being held? Outside the family? Is it in a company or?
No, in his own name.
Okay.
He loves to trade, so he's trading all the time, as Mitch will tell you.
Yeah. I mean, if he was trading in the company, we could put an all-pap over all the assets of the company, obviously, that because we'll put the PPSR across that, and the shares would be sitting there in there, or the value of the shares would be sitting in there, and you'd be covering that.
Mm-hmm.
Let me bounce that off, Rod. To be honest, I don't know.
Have a think, because it's one that I know will come up, and I know that Mitch, because the client is a very active trader. So maybe Mitch, if you could take that offline and contact Michael, it'd be great. Phil, we can access the video and guide. When we send out this video later on today, the video link and also the guide will be there. And of course, send that out to clients as soon as possible. We might be
able to put a loan security deed in across to that effectively the funds have been lent to that individual to do the share trading and then PPSR that loan.
That sounds like a good idea.
Yeah.
But so we might, again, Mitch, have a chat with Michael about that and we'll start to formulate. As you can see, we're getting like that second generation of family protection trust, that split trust. We're getting more and more comments from you and all our advisors, which is fantastic because you're now starting to focus in on, you know, what about this, what about that? And the beauty about the Light Year Doc system is we can change those templates, the interviews pretty quickly. Great. Oh, this is a good one for you again, Michael. And I think this is really key. If a client has investment properties, 2 as well as a home, do you put all properties in a protector? Absolutely. So remember, we don't transfer the properties in, Graham. We're only transferring the value in, and I'm going to just come. So the value goes in. The investment properties in the home are always in the client's name because we don't want CGT or stamp duty. Now, the issue then comes around to the registration of the mortgages. So, Michael, do you want to cover that one? So we've got 2 investment properties and we've also got a home there as well. So 3 properties they have.
Yeah, so we've got to do 3 separate national mortgage forms and 3 separate mortgage deeds. So, which is the terms and conditions, and then take out the mortgage across whether it's a first or second across the equity.
Okay, so one of the elements there you would probably agree, Michael, is that with the protector we need to, with the call options, okay, but we need to actually separate mortgage deeds for your purposes, that correct. If they have 3, that we end up with 3 mortgage deeds. That would be correct?
Correct, yeah.
Okay, so that's one area that we need to beef up the protector on. And again, I dealt with one recently, and again, something that I have to throw through to you as well, Michael, is that if you've got joint assets, that's okay. You can have one mortgage deed for there. Yep. But again, you can do joint equity going over, but you may have separate mortgage deeds depending on whose title's in.
Correct.
But now
it comes down to the title, yep.
Now that you're coming down to actually doing one mortgage deed for each, I think that's a much better way of doing it. Is Ash there at all? Or?
Yep.
So from David Ruthenberg, and I knew he'd come up with this. With that,
yes, we can do that definitely, David.
Okay, so we can white label the guide to family wealth.
Yep.
You can actually
strategist users definitely.
Okay, so if you're not a strategist user, you can't use a protector anyway. So if you're just on our basic, was it better business package?
Light or best practice, or the
practice.
one foundation, firm or protect.
Yeah.
So it needs to be on strategist. So if you're not on strategist, shoot me through an email or Ben, and we can upgrade you.
Look, just being a strategist, which is currently $7.95 a month. Have a look at Mitch. Mitch has got a lot in there. One day we're actually going to have to sit down and get Mitch talking about what he's done. We hear from leading lights such as Tim all the time, but also it's important to know there's some people in our group that have started and are really taking it to the next level. And again, getting this stuff white labeled in, I mean, the value here, getting it white labeled in your own name is fantastic. Lloyd, thank goodness, I had a long chat with Lloyd the other day, who loves his estate planning and really had kept away from the protector. So it's great to see you having a few questions here. Is it possible to protect the increase in future value? So that's a really good point there, Lloyd. So one of the key issues there is, and look, that sort of dumbfounded me, is that when we had a scenario that a client had come in and done the gift loan back, and particularly in these days of high property or increasing property prices, how do we cover the increase? Do we keep on doing a gift loan back? The second point that I also ran a problem with is that originally Tony and I were dealing with a client who had a number of family farms in their own name. And again, the issue there is that if there was an estate, a family provisions claim, an executor or a no-win, no-fee lawyer could prevent that property being transferred over to the Family Protection Trust. Remember, we've just got a simple loan. So what we've put in place now, and this is a really important tool that's hardly ever used, is a call option deed. So the gifter or the legal owner of the property, the investment property, car or whatever, actually does a call option deed for a premium because they're selling it at market value, and they don't want to go under market value. They want to sell it at market value. So it's a market value transaction over to the Family Protection Trust, who'll pay, $100 for that call option deed. That enables the trustee of the Family Protection Trust at any time to acquire that asset market value, which means when I have a look at the balance sheet of John Smith, any upside in that property is not really John's upside. It actually should be booked into the Family Protection Trust. So the underlying call option, if it was revalued each and every year, would increase from that point in time. So that helps us in terms of trustee and bankruptcy because it's a fully valued transaction, not an undervalued transaction for Section 120. So that's how we deal with that one with a call option. Paul Hopkins, can the same company trustee be used for the business protector and a separate family protector? Yes, because essentially the business protector is going to transfer the assets over to that family protection trust. From Daisy, would the protector trust need an ABN? I would say you'd have to have an ABN, wouldn't you, Michael?
Yeah.
John Stead, a person who constantly trades shares is actually in business. The shares held on any day as stock on hand, do a fixed and variable charge over the stock on hand.
It depends. It depends if they meet the definition of a share trader.
Yeah, and look, I think again, it's not the issue of getting the monies in, and again, with a call option, I'm going to have to think about that one. But really, the key issues of that eventum optimum level is how do you do your PPSR over that?
Yeah, we could use a fixed and variable charge. Just leave that with me. Mitch has just sent me an email. So.
Okay, perfect. Well, so Michael will be looking into that. From Nitin, if a client does not have a mortgage on his PPR and owns it outright, will he have to set up a mortgage and credit line to be able to gift the cash? No, not at all. So the process, Nitin, and again, I'm going to go through it now, just so we've got it all in our minds and really understand. It looks as though I'm going over a bit of time, but for those, if you want to stay on a little bit further, otherwise you are going to get a recording. So I've got to go through the steps again. I just want to briefly go over the cases, and I want to show what it looks like on the system. So David, are banks receptive to this? We've got, Michael's already talked about that. Again, Nitin's the following one. Maybe you just want to re-emphasize that.
Yeah, the main thing in relation to banks is just be mindful that if the client's going to utilise the equity in the future to buy, say, an IP or something, we may have to release some of the equity.
Yep, that's perfect. Jenny, thank you for the testimonial. She said she joined as a strategist and is well worth it. And I think anyone who's a strategist would agree with the same. Anthony Brombell, where an individual has two rental properties and principal place of residence, the interest rate on the loan between the Family Protection Trust and the individual, has that issue been resolved? Minimal, peppercorn, real market rate. What do you think? I mean, obviously you've had a lot of chat with Rod around those interest rates. Of course, they could be accrued. Do you like an RBA cash rate? To date, I haven't seen, like, a loan agreement is a loan agreement. And I think that's the main thing, particularly when we look at a TAYA case. But again, do you want to have a quick chat on that one, Michael?
I mean, there's nothing wrong with the peppercorn. I mean, I prefer to do everything at market, just because it, especially if there's anything in relation down the track on someone trying to attack that and saying that you haven't done it you haven't transferred that equity, or you haven't put a loan agreement in across it at what they would consider to be market rate. But I haven't seen any issues with it from the protector's point of view so far. So,
yeah, I think the issue, of course, is when they're paying that interest over, it is effectively non-deductible, but it's accessible to the Family Protection Trust. Here's a little twist in the tail for you, because a lot of you have asked in the past, well, what happens if I sell that property? I want to buy another one. Well, what you do is you sell the property, you get the settlement proceeds, and where do they go? They go into the Family Protection Trust. Then when you go and buy another property, where does the deposit and the cash come from? The Family Protection Trust. Now, at that point in time, it may well be, particularly if it's going into an investment property, the payments to the Family Protection Trust will be deductible at that stage if you're refreshing those properties. So that's important. This is a good one from Mitch again, Michael, and I'm just thinking about it as we speak. So if we're transferring business assets to the Family Protection Trust, which again helps us with our business protector, should these assets sit in a separate service entity under the FBT to limit introducing risk inherent to the actual assets?
Sorry,
so
I was answering something on the chat. So if transferring, that's the FBT. Should these assets sit in a separate service entity?
So for example, if we've got, let's say we're pulling goodwill out of a business and we're going to license it back, should we put it into, for example, I prefer
company? I prefer to have it in a service entity.
Well done, Mitch. Yep. You're learning. He's learning too quick. He's not bad for a Dutchie. Vernon Bedmead, on the loan rates, can you use the safe harbour rate, which is higher than the bank, but still be deductible? Again, if you've got an existing investment property or a house or whatever, it's never going to be deductible because you've already got the financing on that. It's only when it's going to be refreshed. Okay, so let's go on. And again, we've probably got about another 15, 20 minutes for those of you who've got some time. The cases, Attai versus Nussbaum. Son gifted the property over to his mother. And then it was funny because the gift over was $400,000, but the loan back was $1 million. Mortgage deed was taken over the property. And as a consequence of that, the son then attacked the mother, saying that the whole transaction was a sham. He'd fallen out of favour with his mother because he married outside the faith. So it's a very funny case about a cosmetic surgeon down on the Gold Coast. In fact, just as an aside, my ex-wife, Amrita, who was with Now Infinity, before I met her, she went out with him for a couple of years. So talk about six shades or 6 degrees of separation. The Boston Act case, very hot off the press, and you really need to take action on it. It's no good putting your head in the sand. Action is really keen. Re Permiwan, so that was at the Queensland Supreme Court. In that one, it was exactly the same gift loan back, although they were using one where it's more the equity, so it wasn't a promissory note. So it's a bit wishy-washy for me. Family provisions claim, the court did not strike down the arrangement at all. What they did do, though, and this is instructive, and I think we all need to have a look at that, is that the reason they did this was to keep one of the children out of the will. So it's basically a family provisions type of arrangement. Out of that, the court entered into testimony the son who had been pushing for this for his mother and father. The son was the trustee of the Family Protection Trust, but the son was also the executor of the estate. Now, the issue there is that the Supreme Court said, well, obviously there's a conflict of interest in that the executor was not challenged or wouldn't be really wholeheartedly challenging that arrangement with the trustee of the trust. And what they did is they put in place a legal firm as the executor of the estate, enabling them to challenge that action. There hasn't been anything to date on that one, whether they are going to undertake a challenge, but certainly from looking at just from the facts of the case, it looks as though everything seems to be A-OK and above board. But again, watch that conflict of interest. Again, our goal is to see where these things are being attacked and then putting a hole in it as well. New South Wales Supreme Court, Turner versus O'Brien Turner, same sort of thing, gift loan back transaction. I wouldn't really go to read it. It goes for there's 380 paragraphs there. So it goes on forever. Again, another family provisions claim. But the thing that let it down was the promissory note that was put in place. Unfortunately, they failed to fill in all the details of that promissory note. And again, comes back to the situation, if you need someone to review promissory note or your protector, please feel free to use Abbott-Family. So I'm just going to go through again the steps, and then we'll lead in, and I'll then do the system, and then we can see what Eventum Optimum do as well. So establish a family protection trust is step number one. And remember, in fact, before that is setting up that special purpose corporate trustee. This is all, you can find all of this in your the guide to family wealth protection. Again, calculate family wealth. Thirdly, gift the net wealth over to the family protection trust. Lend to asset owners, and feel free to use these slides if you want, if you're doing a presentation to this, to your distribution sources, accountants, etc. And then we talk about that that call option, and I've got a good example there. So I've just lifted all this information straight out of our guide to family protection wealth, but we've discussed all this before. Securing the loan. Do you want to go through that process there, Michael, about securing the loan? Well, I just bounce out of here and I go into our site and build it for someone.
Yeah, 100%, Grant. And there's a note just on that slide that once you complete the protected documents, I strongly suggest, which my friend Michael Samu did just last week, you send, prior to getting the clients to execute the documents, you send them to us. A, we can have a quick look over for completeness. B, more importantly, we will prepare all the other documents that need to go with it, such as the national mortgage forms, and we can starting the PPSR process as well. And so, and then we can provide that back to you to sign, to get your client to execute all the documents at one time, rather than go backwards and forwards with clients, which we have experienced.
Grant, you're on the wrong page. You want to go to just lyd2.com.au.
Okay, I think it's cached in my.
Yeah, you need to clear that.
Because just in relation, like especially on the national mortgage form, because the national mortgage form has we have to attach, as I said before, terms and condition, which is effectively the mortgage deed out of the protector pack. And as part of that, you have to get your client not only to sign the execution page on the mortgage deed, but you also have to get them to sign, all parties to sign each and every page of that at the bottom or on the page, but we suggest the bottom of that as well. So rather than cause too many documents going backwards and forwards with your clients, it's better to shoot them through to us first.
You want to, what's the costing, just so everyone knows about? Obviously, these are going to be disbursements.
It's if it's a first mortgage, it's $775 including the disbursements. It's about $300 worth of disbursements, and then if there's a second, then it's that price plus $220. It's a bit more work in relation to the second in terms of contacting the bank and arranging necessary forms to arrange consent and everything. So
fantastic. Okay, so I'm actually building the Smith Protecto, so that's a new one. But again, you can see now it's a lot cleaner, much nicer style here. Upload your logo. Do you want to give a couple of hints around that one, Ash?
Yep. So we had a few requests by different firms on the current platform, is that they have different logos they may want to use within their firm. So this option allows you to upload any logo you want. After the first 3 times you upload a logo, it will remember that logo. So we can upload anything in there. We do give them some guidance on the size you should make it. We were just getting so many requests about, can we move this to the right? Can we move it to the left? Can we make it bigger? This next part you're on here, Grant, that is include the legal disclaimer. Again, all of our documents per the terms and conditions of the site do have master legal sign off. Grant, do you want to tick that include legal disclaimer? What that will do is at the end of your document, it will come through with the terms to which it was signed off. So the date, the template name, because that's the sign off date basically. Some firms didn't want to include that. So we've had the option to take it on and off. Personally, I would always include it. There's no light year on there. It's all Abbott-Family. So it does give that additional layer of security to your clients, but you can strip it out if you want to. As Grant's going along here. Yeah.
Sorry, just if they want to use the Abbott-Family logo
so we will provide that. So when people get set up in the new platform, we do blast it out over the communications, and they can just save that down. If you just scroll up just a little bit as you're going, Grant, you can see across the top there, some of the new features I'm just going to jump into now before you keep going, is we've got preview documents. So at any time you can press this. This is going to call on the API. It takes a second the first time you press it. And as you build out your document, you can actually see it. So you can see, okay, are there any errors? And what you can see here is that's that legal disclaimer that we have pulled into it there. So that will go at the end of your document. As you can see, Grant hasn't started the interview yet, so nothing's there, but that populates as you build the document out. So you can see if there's any code or something doesn't look right. There is an auto save feature on here. So I think it's every 3 minutes that will, every 3 seconds, sorry, there is an auto save, but definitely save it. That button, sorry, the field just above the logo, if you can scroll up a bit, Grant, where you name the document, that will push in from the step previous where you named it outside of the document interview. But if you need help with your document, that's the name that we're going to ask you. So if Grant needed help with this, he would ring or use the Surge app to say he needed help, and he would need to tell us the name of the document, and then we can retrieve it. If you've got your actually XPM, BGL, and an e-signing solution are coming up over the next week or so. So if you've got them integrated on each page, you can ask it to pull through data. So there'll be another button up the top next to that preview document button that allows you to pull in data from initially XPM, BGL, and next year, so early January, then we'll have Salesforce, MyOb, CSV uploads and that as well in there.
Can you explain these?
Yeah, sorry.
I've just done the first common party. So confirm.
So we can confirm and add next if I want to add another common party or just back. Honestly, you can really press anything and it guides you through it. So if you go confirm and add next, okay, now you need another common party, and you can see up the top there, it says common party 2 of 2. So Grant, you can click, if you want to do it fast, you can click on any of those ones that are coming up. Yep, just click on one that's come up. So you can use those pre-populated answers there, Grant.
I can see that one.
And it just makes it go a little bit faster. So at the end of the day, though, you know, we have all these people, yes, we want XPM integration and whatever, but the only data that's going to pull through is the data that XPM holds. So Grant, choose any of those will make it faster. Okay, no. And XPM only holds the entity name, the entity address, and if it's an individual, the entity date of birth. So Grant, you need to put spaces in your ACN there.
Also, I'm just used to the other one.
And then you can just click on one of those addresses. Just click on it. Yep, there you go, done. And then your state.
And I'll just make it sole director.
Sole director, and then you can, and then just go confirm. How many common parties are you adding? Just 2?
So that's it. So I've got now John Smith, and I've got my
Family Protection Trust.
Okay, protected documents. Would you like to establish a trust? Yes.
So this is a question that, you know, these are the sorts of things that we'll expand on in the interview. So in what instances, Graham, would we establish a trust, and in what instances would we not?
Generally, remember these are clean skin trusts. If you've got an existing discretionary trust that you believe has got 0% of chance of litigation, then you can upgrade, go onto our system, and you upgrade to a leading member discretionary trust. And likewise, make sure if you've got a corporate trustee, you upgrade those both as well. So they're in automation.
Yep, these sorts of tips we're going to add to the interview. Grant, I am going to ask you to leave off the mortgage deed just for this one, because we are just editing for individual mortgage deeds, as Michael's just picked up. So we're going originally they were placing them all in the one. So our coding team is just fixing that up as we speak. Okay,
so let's go. What I'll do is I might, just to save time, I'll go back and remember we've already got one set up, so that's fine. So we put that common party in. So this is what it is. I mean, this is how easy it is, and the beauty about having an automation system. And I can tell you, having worked in the legal side, it's very painful having to go in and do documents from Leap, or do documents by way of pulling out a document and then making changes. So who's the gifter? Oh, well, that's pretty easy. It's going to be John Smith. So that's the next one.
We can confirm.
Confirm. So there's no other gifters there. So we then go to the giftee. Who is that? Remember, that was the trust. So we add the giftee, and we can see there's that Smith Family Protection Trust we've got there. And so again, that's got, see all that information that I put in? Look how easy this is. It's
always
so
a good idea to check. And even if you did have, we're pulling data in, and Ben and I ran a webinar yesterday around this, but if you were pulling data in from XPM or wherever, it needs to be correct. So it's only going to be as good as the data that you put in. So with it, we did yesterday with an integration document, it may take 1 minute. Without it, it might take 1.5 minutes. So it's not the be all and end all. It does just reduce some risk in mistyping things and speeding up addresses. But again, if you don't get it right, it's not going to work anyway.
So we've blown it out. I mean, this really is a copycat of our deed of gift. And our deed of gift was used for charities. So it's as robust as you can get. Once you get this executed, there is no way to get the money back. Absolutely no way. So you can do, as I said, cash, shares, we talked about that. Watch your CGT consequences. And then unpaid present entitlements or other gifts. Now, so we've done the gift, which is fantastic. The next one is the add accountant. Remember, does everyone remember why we're adding the accountant? And that is because we need to do a solvency certificate. So John, accountant, probably should get you to be doing this, Ash, because you're much faster and more accurate typer than me. Well, I'm pretty good.
I feel like you just choose long names.
I do,
Just
don't
choose
I?
one of those addresses. There you go.
So now everyone knows where I live.
There we go.
So we've done the accounts for the solvency certificate, which is for the 4-year rule, which only applies to the gift, remember, the promissory note. It will not apply to the call option or the increased value of the call option. So with the promissor, we go down and we are doing that one. So let me just go back. Add a promissor. And of course, the promissor is going to be John Smith.
Yeah.
So we go down for there and we confirm. That will take us to the next one. And if we do joint, obviously we're going to do the, we add the promisee, Smith Family Protection Trust. And this is why it's important and why it's absolutely vital that these are the only fields that you can complete, because essentially what's happened is Abbott-Family and also Light Year Docs, and they presented to us, is that in essence, you can't change the actual documents. When I come out of this package, I've got about 10 or 15 documents. You can't change those.
And there's a query that's come up from Guy Quinn, the fee for the national mortgage deed. It goes through Eventum Optimum. Michael, what's the fee?
It's $775 if it's the first, and an additional $220 if it's got a second.
Yeah,
it's a second.
So we do have. I will send out with the recording after and the ebook. We've got some guidelines and what to send us to Eventum Optimum with all the costs as well. So I'll send those out.
We might also just when the guys are going through, if there's there, just say, look, you don't need to put the $sign in. So if you just put the number in. So what I'm doing is a promissory note for that $1.15 million.
Yeah.
Okay, so that's it. So now everything is sitting in the Family Protection Trust. Nothing's happening. So what I've got now is I've got the lender, and of course the money's going back. So the lender is going to be the Smith Family Protection Trust. And this is why it's important. I mean, the great thing about this system is it enables a one-man band, or one-person band, I should say, to really go out and do this really quickly. And you don't, do you mean by the time you give it to a staff, if you know what the net value is, you can do it yourself really quickly, thanks to the order.
I feel that anybody would be faster than you here, Grant. This is painful to watch.
Yeah, but I'm doing this is because I can tell you, if you have a look at my good friend, Ian Felberg, he just says that Ash is too fast. She just goes too fast, doesn't give any idea. So I'm just taking it through. And everyone, let's face it, no one else is going to be faster than me anyway, apart from you. So
you are harsh, David. I'm not harsh. It's truly very painful for me right now watching this.
Do you want me to slow it down?
No, but the system does work very fast, and the way we've structured our interview questions, which is very different between us and when I've looked at a lot of the competitors, even LawPath, ClearDocs, all of them, is that the interviews and questions are structured so that you can't mess up the legal sign-off, really. So if you answer the questions properly, there's no room for the document to go wrong. It's in some competitor interviews that I have seen is that the interview questions are so open that what you type in there could ultimately change the meaning of the document and the legal meaning. So these questions are very tight. If you see those, Grant, do you want to hover over one of those little icons? So they're little info icons next to a lot of questions. If you see one of those, definitely hover over it, because there will be some tips in there. Grant, I feel like I'm teaching my father to use an iPhone watching this.
No, yeah, this is where the loan comes in. So you explain to me what I've done here, because I've actually done quite a bit. So the loan term, 30
or the 30 years at the end of life. You can use the cash rate, yes, like that. Loan amount. And Grant, if someone doesn't know the data, can they leave it out, or does this need to all be filled in?
No. Again, if I was attacking it, all we have to do is look at that case in New South Wales. If you don't fill something in, it's gone. So you must fill everything in. So notice here, though, these are open buttons. So they've done well at that, so that I can put at the end of the loan. So it's actually at the end of the loan. So I can put that in. It's much better than having things. So let's go to the call option, date of the deed. So is that fast enough, Ash?
That's much faster, but please ignore Grant's computer. We can't work out his settings. He has all of his dates backwards, but that's on nobody else's but his. So we think, I'm not sure why yours goes backwards there.
Okay, so 100. What is the status of the option? Revocable, which means it can be revoked. I prefer irrevocable, because that means that's a lot stronger. Is the option holder the lender? Generally, yes. Is the property holder the borrower? Yes. And then we add the option property. So let's say that we've got, and because I haven't done the mortgage deed, it normally would come up. But let's say it's 1 Smith Street, Sydney, New South Wales. And then we've got the purchase amounts. Remember, it was $1 million. I think I don't need that. It's fine. And then I can do, as Ash will say, she's getting very frustrated with me, but that's
fine.
That's life. $10 million, he says. Okay, so I've got that one. So that's going to go, obviously, we'll talk about that second with a Venom Optimum. I've also got a vintage Mustang. And remember, we want to make this at market value, because that's what's being transferred in terms of the gift. So that's going to be 150. So that's our call option there. Oops. Perfect. And then the next is the option holder, is obviously the Family Protection Trust. And then we go to confirm. And then that's it for the option holder. And then the property owner is going to be John Smith. And then that's it. So I've saved the data.
Yeah, so I always recommend saving. There is an auto save function, but you just never know. So Michael,
I could obviously preview the document, but I'm not going to have to. So everything's done.
Yeah, once you go from there, you're going to press assemble. Now this one is like do you want to click assemble, Grant?
Yeah.
Click assemble. There you go. Click it. Yeah, this one's a rather large document. So it's just pulling all of that stuff together. If it was a company or whatever, this is the point where it would be sending it to ASIC, but there's obviously no company in this one. What it's going to do now is it's going to take you back to your document page once it's all assembled, where you can download it as PDF. And there's actually options in there to request legal review or to request stamping. So if you hover over towards the right of that document, there's these 3 action icons. You can move the document around. You can order a hard copy. If you go down though, the third to the bottom, what we have is the protector next step. So if you click on that, Grant, this will only show up for the protector document. But what this does is it takes you to a form to fill out that Michael's taken everyone through today. And it just makes the next steps of it a lot easier. You upload the document in there, and that way you probably review it first. But if you start that process in there, upload it all there, Michael can add all the rest of the documents, like the national mortgage form, etc., and then you can send it to your client in one lot to be signed. So you do have the next steps there.
Well, that's good.
And likewise,
That's the first time I've seen that. I'm very impressed, Cash.
that was a new addition late yesterday.
That's why it's important for having people who deliberate and really take time in answering their questions rather than just flying through, because that way we can all understand what's going on.
So this option here is a request a legal review. So obviously all of our templates come with that master template sign off, but there may be instances, perhaps the first protector you do, or you've got complex will or complex trusts or anything, and you want another layer of review, you can use this form, and that will go through to our internal legal team, and Alicia will review that and see if it's something that we will deal with internally at Light Year Docs with our internal legal, or whether we'll go to Abbott-Family and raise a matter there. So there are a whole lot of options on those 3 action items for every document.
Highly recommended for the protector, because there's a lot of documents there.
Look, we do have hard copies as well. Premier on the right hand side are your hardbound folders, and then on the left, which I actually prefer, are the eco-friendly. So you can just go through and order your hard copies there. $45 for eco, Premier is $99. You can add tabs, you can have color, you can have black and white. There are no additional costs from that for anything, and they are sent same day if ordered by 2 o'clock.
Absolutely.
And then you obviously have the option.
Yeah, so if you're the protector, absolutely get those bound rather than print them yourself, because it comes as a formal pack. And the good thing about it is you got that formal pack that's all signed. There's so many documents in there. It is a one transaction. And importantly, it all comes in a line. So you can't say, hold on, that mortgage document was signed before the deed of gift, because it doesn't happen that way. It's all in one line, which is crucial.
So what I'd do after you finish the protector, I would download the document as a PDF and review it. I would then do the protector next steps and upload it for EO to review. They'll do a quick review of the documents as well. They'll add any other documents they need to in there. And then once that's all been approved, you can send them for printing as well. And here's all the documents there.
So there's your accountant's statement that we talked about. Deed of gift, the big robust one. So again, have a good look, and notice how that letter of disclaimer letter is not there. So we've got a really nice. Do you want to just talk about the formatting that changes that went through?
Yeah. So over the last 3 to 6 months, single document has been reviewed, rewritten by legal and internally, and formatted. And the documents are much easier to read than they have been in the past as well. So they're much more client friendly, considering the clients are the ones that are signing it. So there's not too much legal jargon in there. They can be understood by the everyday person. So we spent a lot of time rewriting, reformatting, and redesigning every document so that they are much more presentable to your clients.
One of the ones there is also important, and you can see here, obviously, the call.
Hi, David.
The call option, obviously, I stuffed up there because I didn't put the right field. So whenever you see these little things, it means I just haven't done it properly. But
so you can relaunch your document, so you can go back to that action item and go launch, and you can make any edits. But that's why it's always good to use that preview document feature along the way. If you do it, I would never print from the preview feature. If you do it, the document hasn't been assembled, and then the sign off isn't valid. So always use your assemble and the download the PDF. Don't print from the preview.
And so it's just such a worry, though, that I have to use Chrome and I don't have to worry about invalid.
No, it's all fit. Actually, the system's been built to work on any browser, but not just that, any device as well. So I can use it from my iPhone, iPad, anything. So it works anywhere and anything.
Exactly.
I actually prefer to use Firefox now, but
actually, I'm enjoying Firefox because it's a lot more private.
Yes.
I don't trust Google at all. So there's your package. It's all pretty exciting there. As I said, the key areas for me, I believe, is here, and I'm not going to again, go through the slides, because everything is basically sitting in this document here. If you want to get it white labeled, feel free to do so. But this package is there, and it came about because a couple of people said, well, my clients asked what this call option deed is for. My clients asked why I'm doing this. And rather than you explaining it, it's better for the whole thing is actually laid out there for them. So
if anybody, whilst Grant's been discussing that, I've actually set up an automated option if you would like to white label any of our documents. So I will send that link out as well, so you can just put your details in, and for strategists that will be included in your subscription fee.
Okay, got a couple more questions, then we can close off. Paul Hopkins, good to see you, Paul. If we have the protected trust governed in South Australia, should the gift deed, promissory note all be governed by SA law? No, just leave those in Queensland, that's fine, so in your jurisdiction. Brad Smith, if the trust deed or any of the other deeds have had the date of the 17th of November entered into the system, then the deeds are actually signed and dated on the 25th. Is that a problem? Well, generally no, because that'll still be the start date. Although my preference is what I said, leave the date open. And if you know the client is coming in and you set the date, then change that. If there's a day or two, it's not going to be really an issue.
For Mitch, yeah, that's what we're adding at the moment. We're adding those sorts of clues and clever answers. For Jenny, unfortunately, the two systems are chalk and cheese. They do not talk to each other. The codes are completely different. So coding software for this isn't like not standard code, so they don't talk to each other. If you've started a document on the current Lightyear platform, you need to finish it on that first generation platform. We can't bring the data across. Or you can start, if you've already paid, we can, and so you're on pay as you go, we can transfer the payment over. That's not an issue. But unfortunately, a started interview on the old platform does not get understood on the new one.
Tim's actually done some, I know, Change GPS. Has done the accounting journal entries, which are good, and I'm sure Michael can do them as well for you. When it comes down to the option, let's just spend a couple of seconds. So I actually got a question there for Phil, if you want to clean that up, Ash, around documents on the old system.
Documents produced in the old system will stay there until we turn it off. You can either bring them across on your own, or we can bring them across for you, but that wouldn't happen until probably February next year. So they'll stay there until then, until we switch the old system off. And yes, the EO mortgage checklist and the protected data collection, that guide will go out with the webinar this afternoon. This one's going to take a while to convert, I think.
Yep. That data collection is straight at the end of that book, Eng. You might even want to translate it to Chinese. It'd be a good one. I'm finding, again, for having dealt with a lot of Asian clients over the past, I could never talk them into using SMSFs, no matter how good the tax rates were. But as soon as you talk to them about leaving a legacy for the bloodline or keeping money in the bloodline, it happens immediately. TFN ABN?
TFN ABN are December, so you'll be able to do that. Opening a new bank account with the new laws in banking and identification, it's literally impossible.
With the call option, Paul, what you've done is you've determined the market value of the assets, and they've gone over under the gift. So then what happens is that the option purchase price is to effectively cover the market value. So whatever the market value is for your house, so let's say it's $1.6 million and there's a $600,000 mortgage, then you can only transfer by way of gift $1 million, but the call option is going to be for the $1.6 million house, if that makes sense. Now, if it goes up to $2 million, John's still not going to get that extra 400 because the value of that call option in your balance sheet is going to go from, let's say, $10 or $100, whatever the option premium was, up to that 400,000. Now, mind you, if property prices drop, then the call option is basically out, but you want to leave that option open for a while and also leave it irrevocable.
One more question, Grant, and then we'll wrap up. Bradley Smith, can you add the white label document to be printed? You can actually add any document to that form when you order printing. So, or arrange with me to have the white label document first. Go to EO and get all the forms from them, the national mortgage, etc., and then upload them all, and they can put them all in there together. So it's, you know, if you've got other forms you want to include, we might not know how to, if you're going to include tabs, we might not, the printers won't know where to put them, so you may need to rearrange it, but you can upload any printing into that, just like a Dropbox file or whatever you'd like. So yes, that's it, Grant.
Okay, so we've got a lot of, there's all your contact details. This will come out to you very shortly, but in the meantime, remember you can do all the actions for Venom Optimal Abbott-Family review the site. Anyway, thanks for your time, guys, and thanks, Ash, and also Michael, for the information. And again, a big deep dive on the Protector. If you've got any more questions, just jump on support and let us know. Anyways, Grant Abbott, signing off.